Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, September 21st through Friday, September 25th, 2009. Well, folks, as we get into the intraday charts and the 60-minute charts and so forth, I really want to focus on where this market could be headed because we're coming in towards the end of September, and it has to make you wonder whether or not there's going to be window dressing. Are we going to see the markets continue to be propped up here ahead of the end of the quarter as funds that are underutilizing their cash have to put that cash to work to make sure that they don't lose investors? Or are we going to see this overbought market finally, and I mean finally, start to come in after 50% plus gains in the last 6 months or so across the board? So bottom line is, it's really a pivotal point in my opinion. You have the end of September here, the beginning of October coming up, and it's really where's this market going to head based on these different factors, the different factors in the markets. Are we going to start to look like we're going to pull back, or are we just going to continue to rally and keep going higher? Now, let's talk a little bit about what happened on Friday. First of all, let's talk what the markets did last week. Friday, we saw the markets up about 36 points on the Dow. NASDAQ was up 6, and the S&P 500 was up about 2.8 points. For the week, though, it was a monstrous up week, folks. The market just continued its upward momentum. Really, the last 2 weeks have been amazing in this market. I'll show you the 60-minute chart here. This is going back to the beginning of September. Here's the 3rd, when we bottomed out on that pullback to about 100 on the SPY. And again, this is the 60-minute chart of the SPY you're looking at right now. And from that point of basically hitting 99.50 to 100, you have just gone straight up, folks. I mean, it has been non-stop straight up. Really, you started to pause from making the high last Thursday and then pausing on Friday with a small gain as well. But look at that adrenaline rush push. I mean, you basically went from 100 or 99.50 to 108. That's basically in 2 weeks, 8%, 8.5% gain across the board on the markets from the lows. Granted, we pulled off the highs a little bit, but nonetheless, a tremendous move. Now, I'm going to go back to the intraday. I just wanted to show you what happened last week and over the last 2 weeks to give you guys a sense of what a run this market's been on, just on the near term. I mean, we're not even talking about the longer term of this market, where you go back to March and the market's bottomed out at 666 on the S&P 500. But we're really talking more near term. Just on this near term push, you got to be due for a pullback or a pause, and I think that's what we're getting here. But this bodes the question, or gives us the question, was this pullback 1 day, 2 day kind of pause days ready, setting us up for another move up? Because let's get realistic here. If you go back to the 11th of September, look at that same pattern. Same pattern came in. Granted, it wasn't quite as long, but same pattern came in, and then look at the run we had after that. So it has to be, again, a big major question on, well, which one are we going to do? Are we going to have finally a pullback of decent proportions, or is this just a minor consolidation pattern before a major breakup? And we're going to try to delve into that here a little bit more over the course of the day. Going back to the intraday, folks, this is the intraday. You can see this is Friday here, this is Thursday, this is part of Wednesday of last week, and really what you're going to look for here, folks, is some key levels. Bottom line, there's some major levels on this chart that you have to be aware of. One of them was very interesting on Friday, and I did like this, folks, and I'll explain it in a minute what I liked, and that is that overall, this 107 level for the last 3 days was a very, very important level for this market. I had called out to my premium guys in the research center to watch that 107 level on a closing basis and to see where we got. And you can see if you go back a couple days here, if you go back to Wednesday, you can see as we came up to 107, this white trend line is at 107, you paused, consolidated, finally broke through, then you came back, retested, pushed up again, came back, retested, pushed up, and closed above. Now, at that point, you went up to this 108 level. Now, the 108 is very significant. Why? Because this 107.65 to 108 level happens to be a major gap in the daily chart. So on a daily close, that 107.65 is unbelievably important, and we bounced right off of that. We'd called that in the research center and to our chat room subscribers as well, make sure that they were alerted to that for possible shorting opportunities. And again, just to quickly show you, I'll show you quickly, and I'm going to scan back. Not going to spend much time here, but see this blue line right here? See this gap? That's what we were talking about to our premium subscribers. Right here's 107.65 to 108, give or take a little bit there, and that's that level you have to know is a good resistance, and look at how well it played out on the 10-minute chart. You went up here, you touched it, you pierced it, and then boom, right down, pushed up again, right to that same level, down we go again, and falling back down. So it really shows you how these levels continue to work in a masterful way if you can just read the charts properly. And again, this is all stuff we teach, we go over in the research center to our premium guys. All right. Next up, you can see the pullback came off of that little pop into the close, and still here you closed above 107. So I highlighted the fact that 107 got closed above on an intraday basis. Then yesterday or Friday, whichever day that may be for you at this point of watching the video, you can see that the market pushed down early, came down to this 106.60 level, which by the way is a double bottom from the day before on Thursday. So Thursday, Friday double bottom right here, bounced off, retested, and then bounced off again to 107. Notice how that 107 got broken early and then retested, tried to get above, got above, failed, and came back down into the close. And I think that was the significant point on Friday, is that this market was able to sell off into the close and close below 107, below the 50 and the 20 moving averages intraday 10-minute as well. What does that mean? Well, it means that there's another break point here that we have to be watching, and that new break point is this 106.60 level. You got to watch this level, this orange level. We know it got hit once, twice, 3 times. Now we're going to see it get taken out finally and maybe go to this 200, which would be the target if you were able to take out this low. The 200 will be good support, but it's not unbreakable. It's not infallible, folks. So please be aware of that, is that would be a good intraday bounce opportunity, but it's not going to be the end all or be all for this market to bounce back up. At least it shouldn't be. Good bounce level, possibly 2 bounces off of it, maybe even 3, but ultimately that can be broken. Now, having said that, we have to keep in mind the other side of the story, and I mentioned this at the beginning of the video. There is a sense here that they've been propping the markets up with Bernanke coming out and saying the recession is over. Geithner's town hall meetings and comments. Buffett came out and said he likes stocks. President Obama's been on TV basically every other day, if not twice a day sometimes, constantly putting a bid under the market. There's been upgrades of housing sectors by JP Morgan, upgrades by Goldman Sachs. Those are all propping the market up constantly here in an interim period where you could make a case that it's an interim period prior to the end of the quarter, which is coming up as well. And you want to know whether or not that's been going on to make sure the markets stay up, because they know end of quarter buying is going to come up and prop it up even more and push it up even more. So I hope you guys understand what I'm saying here. I'm saying basically there's a possibility that the overall administration and the powers that be here, whether it's JP Morgan, Goldman Sachs, and some of these other players, are looking to keep this market afloat here while we get towards the end of quarter, because they know end of quarter buying will come in. So there's a couple ways of looking at this, and I want to present both sides to you because you have to make an informed decision about which way we go. Now, obviously, in the Research Center, we give our premium subscribers what we think is going to happen and give them the odds and so forth, as well as the chat room, but you have to be aware of these two scenarios, which one could play out, because there's a lot of cases here where you can make the case that there's money on the sidelines still waiting to go in this market, and with the end of quarter coming, that could be what's going on. So in that case, what you're going to look for is possibly a reversal here on Monday and a move higher. And I think if you recapture this 107 level, you have to look for 108 to be hit again. And at that point, that's probably when you get the end of quarter propping to come in. That could send us as high as 110 on the SPY, which would be another, from this high, it would be another 2 points up on that point. And that then would bring us to some gap fill opportunities that would be very, very significant as well. All right, so those are the two scenarios that you want to watch for, folks. Again, in the Research Center, the chat room subscribers, we're going to present both different angles to them, and we'll tell them which one we believe the odds favor and so forth, which one we're positioning ourselves for, and to go that way. But I want to present both of them. Now, a couple of things. Just quickly, let's talk about what's going to go on next week. I want you guys to be aware of what to look for next week. Next week, Monday, leading indicators. Tuesday, housing price index, Tuesday housing price index, then Wednesday crude inventories. The big thing on Wednesday, folks, 2:15 p.m. FOMC rate decision. So you're going to get the Fed to come out and give some comments. I don't think they're going to change rates. It's more of a matter of what their comments are about the market. Watch the dollar next week as well. $112 billion in auctions next week. Very scary considering how many dollars are being printed at this point in time. Thursday, initial claims, continuing claims, existing home sales, and Friday, durable goods orders, Michigan sentiment, and new home sales. So there is a decent week next week of data. Not a huge week, but really you're going to look at that FOMC rate decision on Wednesday, I believe. That's going to be the key. It's a 2-day meeting, I believe, Tuesday, Wednesday, and you want to know what that's going to do to this market. All right, folks, that's all for this weekend's update. Please join the Research Center and chat room. Going to be fantastic this week as we really get the volume hardcore back in this market. Now going into the late September period and October, we all know the volatility in these next 2 months has been historically huge. We'll talk to you soon. Come join. We'll see you there. Take care.